Hi, welcome to this video today, which is all about catching and holding big Forex trends by keeping an eye on big money flows that are going on in the global economy at the moment. Now, over the last few weeks, we've been extremely bullish of the USD, and the USD has had a great move to the upside. There's plenty more upside to come, in our view. The USD will stay in an uptrend for the next few months, probably longer. I'm not talking about a few hundred pips retracement. Okay, I'm talking about big trends. Thousands of pips on other currencies, and the US dollar last few weeks has done that on many currencies. I'm going to show you a few in a moment, and a few that you should keep your eye on. And in terms of the US dollar, the more it continues to strengthen, the more the likelihood is that two other currencies are going to go into firm uptrends against many other currencies. They're going to be the Japanese yen and the Swiss franc. Now, in terms of, if you want to catch long-term trends, if you keep in mind how big money flows are going on in the global economy at the moment and the implications of those money flows, I believe that you can catch some fantastic long-term trends. I just want to go through a short summary of my logic. So we're going to switch very quickly to a storyboard, go through some facts in relation to big money flows, then just look at some examples as well. Right, let's have a look at the US dollar and why we think it'll remain in an uptrend for many months to come, and also obviously look out for the Japanese yen and the Swiss franc. I just want to explain the logic behind this. Now, in terms of the US dollar, there's a lot of talk about it's not a safe haven currency, it's going to lose its status as the global reserve currency. It's absolute nonsense if you look at the facts, and the facts are this. Look, central bank reserves, major ones around the world, what do they hold most of? US dollars, 63.5%. That's up from the low point in 1991 when they held just 46%. The euro, often touted as an alternative to the USD, just 19%. And the Chinese yuan, which a lot of people say might become the global reserve currency, a mere 1.1%. It's not going to happen in the near future for sure. Also, 85% of currency trading involves the USD. 40% of the world's debt is issued in dollars. 50% of outstanding debts is in US dollars. Okay. Now, look at the world GDP. 40% of it comes from countries that peg their currencies to the US dollar. And another 89 countries keep their currency in a tight range to it. Finally, 65% of all dollars in circulation are used outside of the USA, mostly in Latin America, South America, Russia, and the old Soviet Republic. So how can the US dollar lose its global reserve status? It can't. It's just is by default. Of course it can change, but it's going to take many, many decades for an alternative. And there's no viable alternative around at the moment. The people who say the Chinese yuan, there's just no chance of that happening at all. So it's the global reserve currency by default. Okay. Now in risk on, you tend to get USD outflows. Okay. But with rising rates, you're going to get USD inflows. And if you look at it, the USD, we've had the end of stimulus where they were printing money. They're reducing their balance sheet each month, which means taking dollars out of circulation. And interest rates rising obviously means there's going to be less dollars in circulation. Now, if you look at where a lot of dollar debt is, it's in emerging markets. 3.5 trillion at the end of 2017. Okay, that's very significant. I mean, if you look at also, banks, and people have got to keep in mind, a lot of people don't, that foreign banks actually lend in US dollars. not their own currencies a lot of the time. The banks of Japan, Germany, France and the United Kingdom at the end of 2017 held more liabilities in USDs than their own currencies. And a lot of that debt is in emerging markets or liabilities. Now, less USDs going into circulation and emerging market debt is getting more expensive. Okay, not only are there going to be less loans into emerging markets, they're going to have a real problem paying it back because, yeah, obviously the currency is going up. Interest rates are going up. I think there's about 350 billion in emerging market debt due to be repaid in the next 6 months. Yeah, a lot of that could be defaulted upon, you know. And at the moment, you can see confidence in emerging markets is evaporating. I'll give you some examples in a moment. Now, in terms of the USD, with rising rates, you are getting people who want to invest in it, to get a decent yield in a secure currency. And a lot of people say, well, the USD, problem with the US is all the debt that's around, no confidence in the US. Well, when hasn't the US been in debt? It's been in debt for decades. Sure, it's risen. But if you look at most major countries around the world, they're all in debt. I mean, if you were to take the major economy with the most debt to GDP, it's actually the UK with 1,000%. Look at China, massive debts. It's not just the US. People perceive the US dollar as a safe haven currency, so they trust it. That's investor sentiment. So why will the US dollar go down longer term? I just don't see it at the moment. Of course it could, but everything in terms of the big fundamentals looks in favour of the USD. Now, in terms of if markets get unsettled, the emerging markets are already getting hit hard. You could have debt defaults there. You've got stock market bubbles around the world. The dollar will do well in risk off. Okay, we're not really in big risk off at the moment. Okay, but if we start to see turbulence, the US dollar will rise, and so will the other two safe havens. And they're the Japanese yen and Swiss franc, which I've written twice there. Sorry. Out of the two of them, I think the yen is the one to watch because it's undervalued on PPP, whereas Swiss franc is overvalued. Japanese economy is doing really well at the moment, so they're probably going to end stimulus. It's the world's largest creditor nation, okay? So basically, with risk off and things getting better at home, Japanese will bring their money back to the domestic economy. It also has the world's second largest bond market behind the US. So when you get really big risk off, it'll be the US dollar and Japanese yen bond markets that really take capital inflows. So I don't really see a case for dollar weakness unless the Fed really change course. And of course you get retracements of a few hundred pips or whatever. It's just natural in big trends. But USD for us, looking at a really good long-term bet. And I think the Japanese yen and Swiss franc are currencies to watch as well. Now, in terms of big trends, I just want to show you some examples of the dollar, some big trends in motion, and just how far they might go. So let's go and look at a few charts. Right, here's the USD on emerging market currency, obviously against the Turkish lira. I've said it for a while, nothing good going on in Turkey. And you've seen a dramatic upswing in the dollar, 10% in the matter of a couple of weeks. So you could say Turkey is a special case because of the geopolitical problems that have come in. Actually, I'm quite surprised at the speed of the rise, let's say. Yeah, I'm very bullish to the dollar, but this one, obviously geopolitical problems have come into play. But, yeah, it's across emerging markets generally that you will see the USD going up, and also the weaker credits or minor currencies. Look at that for a rise. If you look at the weekly chart, it can do this again, this whole rise easily. It's a big uptrend. Okay, it's probably going to remain a big uptrend. Now the money is flowing out of emerging markets and not flowing in. And it's not just emerging markets. You can look at minor currencies as well. One of our favourites has been this one, which is the Czech krona. The reason we like this one, over the last year until recently, this is the most overvalued currency against the USD, or the one that's made the biggest move with the Polish zloty. And you can see this is a really fantastic move. Is there more to come? Just switch to the weekly chart and you'll see the potential. Potential's massive. Now, there's plenty more examples. They're just three. Okay, we've got our eye at the moment on two emerging markets really to start to fall heavily. They're starting to fall, but not heavily yet. USD ZAR, USD CNH offshore spot Chinese yuan. You can check them in the trading tips section of our site. So the US dollar, I think, is going to continue its bull run against minor currencies and emerging markets. And we're dollar bulls, and we've got an exposure in the majors, but we've got as much exposure in the minors. It's the minors that are doing fantastically for us. I don't see that changing. Now, the stronger the US dollar gets, the more chance there is of a move up in the yen and the Swissy, and I particularly like the yen. Hasn't confirmed an up move yet, in my view, but I think we're getting ready. On a lot of the minor currencies, you can look at the yen and the Swiss already, but I think the yen and the Swiss will move higher. Also, all other majors. The yen will move up on all other majors, including the USD, and I think the Swissy will surprise a lot of people. I think a lot of people are just too bearish of the Swissy. We're doing swing trades in it at the moment. I think there's good potential there as well. So for us, the three currencies we're basically long of at the moment are obviously the dollar. We've got some yen and we've got some Swissy. And I think moving forward, volatility is going to pick up. And those three currencies, if you keep them in mind, particularly against the weaker credits, they could do really well. Right, that is the video for today. Thank you very much for watching me as usual. Take care and have a good day.